All right, welcome in everyone to the deep dive. We've got a big one today. We're going to be diving into Mitsubishi Corporation,
Mitsubishi Corporation.
a company that, has really been around for a while. They're actually hitting a pretty impressive milestone coming up here. There's 70th anniversary in July 2024.
70 years. Wow. That's quite a legacy.
Yeah. They've evolved quite a bit from, what you might think of as a traditional trading company into kind of managing a whole bunch of businesses across all kinds of different industries.
Yeah, definitely not your typical trading company anymore.
No, not at all. So today we're really going to dig into their business, try to understand kind of where they stand today, what their future direction looks like. We're going to be looking at what are those core segments of their business, what are their financials like, and what are the strategies they're using to try to, increase their corporate value.
All really important questions. And lucky for us, they've got this really comprehensive document, their integrated report for 2024. And it's not just your typical dry financial report. It dives into their governance, how they engage with stakeholders, their financial policies, and, what they see as the strategic direction for each of their businesses.
Yeah. Sounds like they're really trying to give a holistic picture of themselves.
Exactly. And it's all based on the IFRS, the International Financial Reporting Standards, which makes it easier to compare them to other global companies.
So a really, really useful document for us today. All right, so I guess let's jump right into it. One of the first things that caught my eye was a pretty big change in how they structure their business.
Oh, yeah.
They've gone from 10 business segments down to 8 in fiscal year 2024. So what's the big idea behind that? What are they trying to achieve with this reorganization?
Yeah, you hit the nail on the head. It's all about creating what they call MC shared value, or MCSV for short. It's basically this idea of creating value not just within each individual business unit, but by getting them to really work together, collaborate, and find synergies across their whole portfolio.
Makes sense. I mean, 10 segments, that's a lot to manage. It sounds like they're trying to streamline things, break down some silos maybe, and really capitalize on those connections between their different areas of expertise.
Exactly. And it's a bet, right? They're betting that the combined power of these 8 segments working together will be greater than the sum of their parts when they were 10 separate units. It's a shift toward a much more integrated model.
Okay, so let's break down these 8 new segments. How do they actually map onto the previous 10?
Right. So 2 of them stayed the same, natural gas and mineral resources. Those are still standing on their own. But then things start to get interesting. They've merged their next generation energy business and industrial infrastructure into one segment called environmental energy.
Environmental energy. That's pretty broad.
It is. And it suggests that they're thinking about the future of energy, the infrastructure that's going to be needed in a more holistic way. Then you've got industrial materials and chemical solution, which they've combined into materials solution.
Materials solution.
Yeah, which indicates a focus on the whole life cycle of materials, from raw materials all the way to specialized chemical products. And then they've done this big consolidation, bringing industrial infrastructure, real estate, urban development and urban management, and their water businesses all under one umbrella, urban development and infrastructure.
Wow. That's a mouthful.
It is.
Yeah.
But it really highlights their focus on creating and managing sustainable urban environments, and not just in one place, but on a global scale.
Okay, that's 4 down. What about the other 4 segments?
Right. So mobility remains as a dedicated segment. They're clearly still committed to the automotive sector and the broader changes happening in the world of mobility. Food industry is also still there, focused on, the food industry, which is obviously a pretty critical area for the world.
Yep, can't live without it.
Exactly. Now, this one is especially interesting smart life creation. They've combined consumer industry digital transformation, bio, and even financial businesses into this one segment.
Wow, smart life creation. That sounds almost futuristic.
Right. It really does. It suggests that they're thinking about how to use technology, data, and their existing consumer touch points to create new solutions and services that improve people's lives.
Okay, so that's 7. What's the last one?
The final one is power solution. And this one's interesting because elements of it used to be spread across other segments. Now it's standing alone, which really underscores the strategic importance of the power sector for Mitsubishi Corporation, especially as the world transitions to cleaner energy sources.
So it sounds like a pretty deliberate restructuring. A lot of thought went into it. They're clearly trying to create more synergy between their different business areas. And speaking of strategy, they talk a lot about their value-added cyclical growth model in this report. So can you unpack that a bit for us? What is this model all about, and how does it drive their growth?
Yeah, it's basically their framework for how they reinvest their resources and find new opportunities for growth, and they do it in a really systematic way.
Okay.
So there are 5 key stages in this model. First, they do a cyclical growth review. That means they're constantly looking at the landscape, identifying potential projects, assessing those opportunities, and keeping track of how things are evolving.
So constantly scanning the horizon for the next big thing.
Exactly. Then the second stage is about enhancing the value of those opportunities through that MCSV creation we were just talking about, leveraging the synergies between their diverse segments.
Okay. So 1 + 1 = 3 kind of thing.
Exactly. Then the third stage is all about investing. They take the capital they have and they put it to work in those promising areas they've identified across all their different businesses.
Makes sense. You got to put your money where your mouth is, right?
Absolutely. The fourth stage is all about efficiency. They're really focused on improving their capital efficiency, which basically means getting the most bang for their buck, maximizing the return on every investment they make.
Yeah, squeezing every bit of value out of every dollar.
Exactly. And then the fifth stage is about accelerating that growth. They have a pretty flexible capital policy, which means they can move quickly when they see an opportunity.
So it's not just a rigid step-by-step process. It's more like a continuous cycle, right?
Absolutely. It's a loop. So that increased efficiency they achieve feeds back into the cyclical growth review, allowing them to identify even better opportunities.
Okay, so it's identify, collaborate, invest, optimize, and then use that optimization to fuel further growth.
You got it.
And a key part of this model is that MCSV creation, generating those synergies between their different business segments. And they really highlight the Eneco acquisition as a prime example of that in action.
Right. The Eneco acquisition is a great case study. Eneco is a European energy company, and Mitsubishi Corporation acquired it jointly with Chubu Electric Power back in 2020. And what's interesting is that Mitsubishi Corporation didn't just bring money to the table. They brought their expertise in finance, strategy, and their connections across various industries.
So it's not just about buying a company, it's about bringing something unique to that company.
Right, and the results speak for themselves. Eneco's net income has gone up significantly since the acquisition, and their EBITDA earnings before interest, taxes, depreciation, and amortization has been growing at a healthy rate.
Okay, so a pretty clear example of how they're putting this MCSV idea into practice and actually seeing results, and they see even more potential with Eneco in the future, right?
Exactly. They're looking at things like electric vehicle power, virtual power plants, or VPPs as they're called, and even longer-term initiatives like Power to X and green hydrogen. All areas where, Mitsubishi Corporation's broader expertise can really add value.
So really tapping into that synergy potential across their different segments.
Okay.
Let's dive a bit deeper into some of these key business segments now and see what their specific strategies are, starting with the environmental energy group. What are their main goals, and what are some of the big trends that are shaping their approach?
Well, for environmental energy, it's pretty clear that they're very much focused on the global energy transition, the shift away from fossil fuels and towards cleaner energy sources.
Right. I mean, that's the big story in energy right now.
Exactly. And their strategy is two-pronged. On one hand, they're strengthening their existing LNG liquefied natural gas business. They see LNG as an important bridge fuel during this transition. It's cleaner than coal, but it's still a fossil fuel. And they're aiming to significantly increase their LNG production capacity in the coming years.
So not abandoning fossil fuels entirely, but definitely looking to the future.
Exactly. And that's where the second part of their strategy comes in. They're also investing in next-generation energy technologies, things like clean ammonia, sustainable aviation fuel, SAF hydrogen, e-methane, and carbon capture and storage.
Wow. That's quite a list.
It is. It shows that they're really committed to being a part of the solution when it comes to climate change. And not just that, but they also see a lot of business opportunities in this transition.
Right. It's not just about being good, it's about doing well, too.
Yeah, definitely. They see a lot of growth potential in these new energy technologies.
Makes sense. Okay. Moving on to the materials solution group. They're taking this kind of holistic approach to the materials industry. So what are their key strategies, and what are some of the big trends that are influencing their decisions?
Well, a few trends are really driving their strategy here.
Yeah.
One is the expected growth in construction and infrastructure spending in the U.S. That's a huge market.
Yeah, a lot of potential there.
Definitely. Another trend is the demand for more advanced materials in things like electric vehicles and all the new digital gadgets we're all using. And of course, sustainability is a huge factor. There's a growing emphasis on recycling and using resources more efficiently.
Right. So how are they responding to all of this?
Well, they're focusing on a few key areas. First, they're really going after that U.S. construction market, trying to capture a share of that growth. They're also expanding their production of those high performance materials that are needed for electric vehicles, advanced electronics, all that stuff.
Yeah.
And they're putting a lot of emphasis on recycling, finding ways to reuse materials and close the loop, and they're even exploring opportunities in the semiconductor industry, which is, as we all know, a critical part of the global economy.
Yeah, chips are everywhere these days.
Exactly.
Okay.
Mhm.
Now, what about the mineral resources group? They talk about this shift from being product-centered to being societal challenge-centered.
Hmm.
What does that actually mean in practice?
Yeah, it's a pretty interesting evolution. Basically, they're moving away from just thinking about, okay, how do we produce as much of this mineral as possible? And instead, they're asking themselves, how can our business help solve some of the big challenges facing society?
So it's a more purpose-driven approach.
Exactly. And a lot of this is driven by the need to decarbonize the global economy and the growing demand for minerals that are essential for electrification, things like copper and lithium, which are used in batteries for electric vehicles.
Right. So it's about aligning their business with broader global goals.
Exactly. And they're doing this in a few key ways. They're focusing on things like direct reduced iron, which is a way of making steel that's less carbon intensive. They're also working to ensure a stable supply of the raw materials that are needed for steelmaking, while also exploring ways to reduce emissions from that process.
Okay.
And they're really pushing into those battery minerals, copper, aluminum, bauxite, lithium, nickel, all those things that are going to be in high demand as the world electrifies.
So positioning themselves to be a key player in that transition.
Exactly. And they're not forgetting about the circular economy either. They're actively looking at ways to recycle non-ferrous metals and lithium-ion batteries.
So it's not just about extracting more, it's about using what we already have more efficiently.
Exactly.
All right. Now, the Urban Development and Infrastructure Group has a pretty wide scope. What are they focused on when it comes to growth? And what are some of the big trends that are shaping their strategy?
Well, the world is becoming increasingly urbanized, so they're really focusing on large-scale urban development and management projects, both in Japan and in other countries.
So building the cities of the future.
In a way, yeah. And they're also looking at the digital infrastructure that's needed to support those cities, things like data centers, which are becoming increasingly important as we rely more and more on data and cloud computing.
Yeah, those data centers are power hungry.
They are. And they're also focusing on making their existing real estate and infrastructure businesses more sustainable and efficient by incorporating things like decarbonization technologies and automation to save on labor costs.
So trying to address those big urban challenges like climate change and the cost of living.
Exactly. And the report mentions that they're planning to invest heavily in both real estate and data centers in the coming years.
Okay. So big plans for that segment. Now, the mobility group is all about, well, mobility cars, transportation, and all that. How are they planning to capture growth in a sector that's changing so rapidly?
It's a tough one, but they're taking a multi-pronged approach. First, they're working to strengthen their existing automotive value chain in Southeast Asia, which is a key market for traditional vehicles.
Okay.
But at the same time, they're looking at the growing demand for vehicles in other emerging markets. And they're also building new businesses around mobility services, which is this whole idea of mobility X, energy X, data X, new services.
Mobility X, Energy X, Data X, new services. That's a lot of X's.
It is, but it basically means they're looking at things like ride sharing, electric vehicle charging infrastructure, and all those data-driven solutions that are transforming how we get around.
Okay, so it's not just about selling cars anymore. It's about providing a whole range of mobility solutions.
Exactly. And they're also growing their auto leasing business, which provides a more stable, long-term revenue stream in an industry that's, facing a lot of disruption.
Right, because people will always need to get around somehow.
That's the idea.
Okay, now for the food industry group, food security and sustainable food systems are obviously huge global issues. So how are they approaching those challenges?
Well, they're really focused on ensuring a sustainable supply of high-quality food for a growing global population.
Which is getting harder and harder to do.
It is, yeah. And they're looking at the trends. Things like the growing demand for sustainably sourced food, the need to make food supply chains more resilient, and the potential for new technologies in agriculture and food processing.
Okay, so how are they putting all this into action?
Well, they're carefully managing their portfolio, focusing on areas where they see the most potential for growth, like aquaculture, specifically salmon farming.
Sam.
Yeah, they see a big gap between supply and demand there. And they're also investing in technology and innovation to make the whole food value chain more sustainable and efficient.
All right. Makes sense. Now, the Smart Life Creation Group, that one really caught my attention.
Yeah.
It seems like they're taking a very consumer-centric approach there. How are they looking to create value in that space?
Yeah, they call their strategy C2B, consumer to business.
B2B.
They're really trying to understand consumer needs and then develop products and services that meet those needs. And they're seeing a few key trends. People want convenient digital services, they're interested in health and wellness, and they want more integrated financial services.
Okay.
And they're in a good position to capitalize on those trends because they have a massive existing customer base, particularly through their convenience store network and their loyalty point programs.
Right. So they're not starting from scratch. They've already got those relationships.
Exactly. And they're looking to leverage those relationships to get into new areas like healthcare, finance, and digital solutions.
So using those existing touch points to expand into new markets.
Precisely. And they're also trying to create more synergy between their consumer-facing businesses and their B2B businesses. And they're also looking to expand their international presence.
So thinking globally.
Definitely.
Okay. Finally, the Power Solution Group. The energy transition is happening fast, with renewables playing an increasingly important role. So what's their strategy for growth in this evolving landscape?
Well, they're basically trying to cover all the bases. They're developing and operating renewable energy projects themselves, things like offshore wind farms. They're also integrating their existing energy businesses, like Eneco, to offer more comprehensive solutions. And they're providing a whole range of power solutions to different customers, including retail power supply, corporate power purchase agreements, and new services like electric vehicle charging and smart grid management.
So they're trying to be a one-stop shop for all things energy.
Pretty much. And they already have a significant amount of power generation capacity, with a growing share of that coming from renewables.
Okay, so clearly a lot going on across all of their business segments. Now let's shift gears and take a look at their financials. What are some of the key takeaways from their report when it comes to their overall financial performance?
Sure. So their consolidated financial statements, which are prepared under IFRS, show strong revenue generation.
Okay.
However, it's important to note that this revenue can fluctuate quite a bit depending on things like global commodity prices and the overall economic climate. Some of their businesses, like natural gas and mineral resources, are more sensitive to those external factors than others.
Right, makes sense.
Their profitability has also varied over time, influenced by those same external factors, but also by the success of their strategic initiatives.
Okay.
And sometimes they have to take impairments on their assets, or they might have gains from selling assets, which can also impact their bottom line. But overall, their total assets have generally been increasing over time, which reflects the growth and diversification of their business.
So they're getting bigger and more complex.
Exactly. And a key reason for their overall performance has been their active management of their portfolio. They're constantly looking at their different businesses, investing in those that have high growth potential, and divesting from those that are underperforming or that don't align with their long-term strategy.
So kind of a constant balancing act.
Yeah, pretty much.
Okay. Now, what about their balance sheet? What does that tell us about their financial health?
Well, one thing that stands out is the increase in equity attributable to the owners, which is a good sign. It means that shareholder value is growing, driven by profitability and effective capital management. They do have a significant amount of debt, which is reflected in their gross interest-bearing liabilities.
Yeah.
But that's not unusual for a company of their size and scope. They're involved in a lot of big projects and investments. What's important is that they're managing their debt well.
Right.
And that's reflected in their net interest-bearing liabilities, which are significantly lower than their gross liabilities. This means that they have a good amount of cash on hand to offset their debt. Overall, their balance sheet suggests that they're in a pretty healthy financial position.
Okay. That's good to hear. Now, the report also provides some insights into how they're allocating their cash flow. Where's that cash coming from and how are they using it?
Well, their cash flow statement shows that a big chunk of their cash is coming from their underlying operating activities, which means that their core businesses are generating a lot of cash.
Okay.
They've also been getting a lot of cash from selling off assets, which has actually exceeded their targets. And that includes some gains from selling off some of their coal mining assets, which is part of their strategy to shift away from fossil fuels. Now, on the other side, they're spending a lot of cash on investments.
Makes sense. Gotta invest to grow.
Exactly. And those investments are aimed at both maintaining and expanding their current earnings capacity, but they're also investing in energy transformation, digital transformation, and other new growth initiatives.
So they're investing for both the present and the future.
Exactly. And they're also returning a significant amount of cash to their shareholders through dividends and share buybacks.
Okay. So they're trying to find that balance between investing for growth and rewarding their shareholders.
Exactly.
Now, they seem to be really focused on improving their capital efficiency. How are they going about doing that?
Well, their value-added cyclical growth model is a big part of that. Remember, that model is all about continuously reviewing their portfolio, investing in high-growth, high-return opportunities, and getting rid of underperforming assets.
Right. So constantly optimizing.
Exactly. And they've also set specific ROE targets for each of their business segments, which helps to drive performance and accountability.
So making sure that each part of the business is pulling its weight.
Exactly. And they've already seen some significant improvements in their earnings by replacing some of their lower yielding businesses, and they expect to see even more gains in the coming year.
Okay. So they're making progress. Now, I also noticed that they're actively reducing their cross-shareholdings. What's the thinking behind that?
Yeah, that's an interesting move. It's all about improving capital efficiency and corporate governance.
Okay.
Cross-shareholdings can tie up a lot of capital that could be used more productively elsewhere.
Right.
So by unwinding those positions, they're freeing up capital that they can either invest in their core businesses or return to shareholders. And it also sends a signal to the market that they're committed to a more transparent and efficient approach to capital allocation.
Okay. So it's a good housekeeping move.
Pretty much, yeah. And they've already sold off a significant amount of those cross-held shares, so they're serious about it.
Okay. Now let's talk about their plans for creating shareholder value.
Yeah.
What's their approach to dividends and share buybacks?
Well, they have a pretty balanced and flexible approach to shareholder returns.
Okay.
Their dividend policy is progressive, meaning they aim to increase the dividend over time, and they have a target payout ratio of 40%. So 40% of their underlying profit goes back to shareholders in the form of dividends.
Okay.
And on top of that, they've also been doing share buybacks, which reduces the number of shares outstanding and can boost the share price. They spent a lot of money on buybacks in the past 2 fiscal years.
Okay.
And for the current fiscal year, they're forecasting a dividend of 100 yen per share, which has been adjusted for a recent stock split.
Okay. So clearly committed to returning value to their shareholders.
Definitely.
Now, beyond dividends and buybacks, what else are they doing to enhance shareholder value?
Well, all their efforts to improve capital efficiency, the value-added cyclical growth model, reducing cross-shareholdings, all of that ultimately contributes to creating long-term value for shareholders.
Right.
And they're also really focused on communication, making sure that investors understand their strategy and their plans for the future.
Okay.
They've even created a new organization, the CSEO, to specifically focus on stakeholder engagement.
So they're really trying to be transparent and keep everyone in the loop.
Yeah, absolutely.
All right. So as we wrap up our deep dive into Mitsubishi Corporation, what's your overall assessment of their prospects for the future?
Well, I think they're in a pretty good position. They're a huge company with a lot of different businesses, and they're actively adapting to a changing world. Their recent reorganization is a sign of that. They're clearly focused on creating more value by getting their different businesses to work together more effectively. Their growth strategy, which is based on that value-added cyclical growth model and their focus on MCSV, is aligned with some of the biggest trends that are shaping the global economy, like the energy transition and the digital revolution.
Right.
And they're doing well financially. They're generating a lot of cash. They're managing their debt responsibly, and they're returning value to shareholders. And they're also committed to sustainability, developing their people, and maintaining strong corporate governance. So all in all, I'd say they have a lot going for them.
Yeah, it sounds like they've got a pretty solid foundation for the future.
They do.
All right. Well, for anyone who wants to learn more about Mitsubishi Corporation, I highly recommend checking out their integrated report for 2024, We'll put a link to that in our show notes. It's a really comprehensive document that goes into a lot more detail about their business segments, their financials, their sustainability initiatives, and their overall strategy.
Yeah, it's a great resource for anyone who wants to get a deeper understanding of this complex and fascinating company.
Absolutely. And as you read that report, I want you to consider this question.
Okay.
In a world that's constantly changing, with all these challenges and opportunities, how will a company like Mitsubishi Corporation, with its unique conglomerate structure and its focus on creating shared value, navigate the future? Will they be able to adapt and thrive?
It's a question worth pondering.
It is.
Oh, yeah.
Thanks for joining us today on The Deep Dive. We'll see you next time.
See you next time.